Hi, this is Raghav. Welcome to Insights on Personal Finance. In this video, let's talk about debt trap. Well, what is a debt? Technically speaking, a debt is an amount of money that you owe to somebody. So if you borrow money from somebody, you are going to give it back at an agreed contract. That is, if you were going to borrow money from, let's say, a bank, so you are going to tell the bank, yes, I'm going to repay the money in so and so period, in so and so terms. That is, I'll pay it on a monthly basis or a quarterly basis, whatever it is. The bank agrees for that and gives you money. But the bank is not going to do it for free of cost. It will charge what is called as interest rate for the amount that you borrow. So bank makes money out of lending money to the borrowers, right? That's business of the bank. So they take money from the depositors and they lend it to the borrowers with the interest. So when you pay back the money to the bank, you are not only paying your initial principal that you receive from the bank, you are also paying the price for it, that is the interest. So remember, debt is not free. It does comes with its price. So in other words, debt is a way of spending tomorrow's income today, right? So you are taking money today from the bank, and from your future income you are paying the bank the principal that you borrowed today. But remember, you are also paying the interest along with it. So essentially you are spending tomorrow's income today by borrowing money from the bank. And equated monthly installment, it is nothing but a form of debt. So where it is packaged in such a format that you pay not only the principal, you also pay the interest along with it in an equal way. That's basically the interest charges are equally distributed across several months. So that way you don't feel the pain and you pay the money consistently to the bank. Either way, remember that you are paying extra money to the bank in the form of an interest when you borrow money by taking a loan from the bank. So then why are people getting into debt? There are many reasons why people get into debt. One of the prime reason why they get into debt is they are basically buying things which they cannot afford, right? Let's say I'm going to buy a car. I need 5 lakhs to buy a car. I don't have that money. So basically I can't afford it. But what most people do, they go and borrow money from the bank, take a loan, and they agree to pay a small amount as a monthly installment, let's say 20,000 or so that they can get the car for consumption immediately, right? So that is what I meant by saying spending tomorrow's income today. So basically you are willing to pay a higher cost for the product because you want to consume it earlier. You can't afford it today, but you want to consume it today. So at the end of the tenure, let's say you've taken a loan for 5 years, the cost is only 5 lakhs, but when you add up all the EMIs that you have paid to the bank, it may come well over 7 lakhs or 8 lakhs, right? Because that is the cost you pay to the banks for borrowing the money. Sometimes people also buy things which they don't really need just to impress others. So my neighbor is having it, so I also should have it. But they can't really afford it. So what they do, they take a loan and they go and buy the product or whatever things that they want to buy, and just to impress others, right? So that is another reason why people get into debt, which is totally not it's not required at all. So when you get into so much debt that you are unable to manage it, that kind of scenario is called as a debt trap. So what do you mean by a debt trap? A debt trap means you have so much of borrowings that every month you have to keep paying the EMIs, right? But your income is barely matching that, or sometimes it is even lesser than the EMIs that you're paying out, right? Let's say your income is 50,000, but the amount of EMIs that you're paying for various loans is, let's say, 60,000. That means your income is less than your expenses, right? So that is a sign of a debt trap, right? Not only in terms of bank loans, so people also borrow money indirectly by using a credit card, right? Credit card is the most expensive way of borrowing money. So another sign of debt trap is you are not paying the credit card bill in full, because they give you an option to pay the minimum payment. So you start paying that minimum payment, and the interest on the balance accumulates on the credit card at a very high interest rate. So that is another sign of a debt trap. And you are not able to buy anything using your savings or cash. So anything that you buy, you are totally dependent on your EMI provided by the the shops, or whatever consumption item that you are buying, or you are using a credit card to do that. That clearly shows that you are in a debt trap. So when you get into a debt trap, it's very difficult to come out. You have to realize first that you are in a debt trap and acknowledge it, and then find means of coming out of the debt trap. So what are some ways you can come out of the debt trap? One of the ways that you can come out of the debt trap is identify the borrowings that you have made at a higher interest cost. Take another loan. Unfortunately, we have to take another loan for this, but take a loan at a lower cost, typically from a nationalized bank. They offer loans at a lower price compared to private banks. So take a loan and pay all those pending loans that you have, right? Bring it down to one payment, that is to only one loan. Pay all your credit card bills, etc. And do not buy any more things using your credit card or EMIs, right? So basically, if you can't afford to buy it using cash, if you don't have cash to buy it, that means you can't afford it. Better delay that particular purchase, right, until you can save that money and pay it. So these are the things that will help you to come out of the debt trap. Remember, EMIs and loans are very popular because it is all pushed by the banks to make profit. Banks are making extremely high profits by giving loans to the consumers. With the exception of home loan, there is no need to take a loan at all, right? You just save the money and then use that money to make the purchase. So if you don't have that much money, means you can't afford it at that point of time. So better plan your savings and increase your savings, and then delay the purchase and then do it at a later date. And don't ever get into a lifestyle to impress others that forces you to take debt, right? That is not at all worth it. Remember, sometimes a debt trap can also become a debt trap. That is, we do come across some news in the newspapers often that people commit suicide because they are unable to pay their borrowings, right? So these things are very common. So we should never get into such situations. You should be aware of all these things and ensure that you live a lifestyle which is according to the income that you earn. So you avoid debt to whatever possible extent you can, and live a stress-free lives. In other words, again I iterate, avoid debt and live a stress-free life. So that's the message that I wanted to convey in this video. I hope you found this useful, and I thank you for watching this video.